So with this 3-bar initial trend reading accompanying the continuation channel up, here's where the initial trend gives me an idea, narrows down the possibility for what type of strategy I should apply to this pattern. 3 bars, 1 to 3 bars indicates accumulation, a sideways market. As I mentioned before, 6 to 10 bars would really suggest the likelihood for continuation, either off the support of the channel up or up through the resistance of the channel up. Instead, we're seeing what looks to be a break of the channel up. So what's happening here? The 15-minute chart is moving into transitioning from what was a markup cycle that helped form this continuation channel up over the past 103 candles, which you can see here under length. It's transitioning into a sideways range-bound, what's known as an accumulation market cycle. In a sideways market cycle, what's going to happen? I'm going to reverse the trend, not necessarily going to a downtrend. Don't assume a reversal means an about face, a 180 on the psychology of the market. What it actually is pointing to is the possibility that prices are going to break the support of the uptrend line, possibly move sideways, and if by breaking the support of the uptrend line and maybe at a few other key price levels, the sentiment could shift from what was bullish to possibly neutral, then to bearish. That would be a classic representation of the cycle of market trends that Charles Dow talks about. Uptrend, sideways trend, transition to possibly a downtrend. Now that doesn't mean this couldn't also transition from a sideways trend to a resumption of the uptrend. That doesn't mean that couldn't happen either. When you have a 1 to 3 bar initial trend reading, my recommendation is don't quote unquote pick sides. Don't have a bias. Now, I may know that the euro US dollar overall, when I say overall, I'm talking specifically about the psychology of the daily time frame. Overall, we're in an unbelievably bearish market on the euro US dollar. In fact, even if I look at the euro US dollar on the 15-minute time frame, if I look at, say, the past 5 days of look back, the past 5 days of data, I'd say overall we've been moving down since prices came lower through 1.2600. Yes? Most recently, we've bounced from 2200. Okay, most recently you can see the correction, the bounce that we've had of the overall, I think, trend lower. I mean, we're lower now today than we were 4, 5, 6 days ago. So the overall trend can be considered down, but the near-term trend is actually up, which is how this pattern formed. If I'm looking for what the overall psychology of the euro US dollar is, I think anybody would know it's down. So certainly, if I'm going to have any kind of bias, or at least recognize the overwhelming sentiment of the market, it's bearish. But that doesn't mean that I don't have near-term or short-term time frame opportunities to play corrections. In other words, buying opportunities within this longer-term downtrend. Because, and I'll bring this up in a moment. If you were to look at the power stats, okay, if you look at the power stats, which you have access to here through IBFX, you'll see that the daily range of the euro US dollar could actually offer shorter term time frames like a 15-minute, plenty of opportunity to transition from uptrends to neutral trends to downtrends. There's enough price movement to justify different entries on a short-term time frame. So let's take a look at that.